Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ashwani Gujral joins in. Ashwani, in the morning you were talking about how the momentum is weakening and perhaps the frontliners may also follow the mid-caps lower. Is there a trade that you would recommend on any of the benchmark indices?
Nifty is now only at a 4-point premium and Bank Nifty is now at a 50-point discount. That means there is profit booking and shorting which is happening at higher levels, and it's only a matter of time before the 3 or 4 stocks which are holding up the market give way. So this is a good time to get short on Nifty, Bank Nifty, etc. This sort of market breadth 1:4, it never sustains a market, particularly an overextended market which is getting into an event. So my sense is the market is very precariously poised and should head towards the downside. Having said that, in terms of calls, Bajaj Finserv is a sell with a stop of 53.20, target of 5200. Balrampur Chini is a sell with a stop of 70, target of 62. And Coal India is a buy with a stop of 262, target of 275.
All right, Ashwani, thanks very much for joining in and giving us your afternoon trades. All right, with that, let's focus now and talk about the latest in the on JP Infra in the insolvency space, actually. So we understand that the lenders to JP Infra have rejected the resolution plan which was submitted by Lakshadweep by an overwhelming majority. Ritu Singh, who broke that story, now joins in with the very latest. So Ritu, one is out of the way. What happens next?
Well, firstly, the companies confirmed what we told you yesterday, that the Lakshadweep offer that was on the table for 7350 crore rupees, that has been rejected by the lenders. We understand that almost 85.7% of the lenders voted against this offer, primarily because they feel that it was undervaluing the company. Now, you understand that the liquidation value of Jaiprakash Infotech, owing to the larger land bank that the company has, is close to 12 to 14,000 crore rupees. And the offer was not even close to the debt of the company, which is 10,000 crore rupees. And therefore, a majority of the lenders voted against that proposal. So what happens next? Well, the resolution professional will now take this case to the NCLT bench and propose the offer for liquidation, because do remember the deadline for the company for resolution ends on the 12th of May. But before that, because a lot of home buyers are also involved in this case, the Supreme Court will also hear the matter on 11th of May. That is, tomorrow, to ensure the proper steps are taken to protect the interests of the home buyers. Also, parallelly, we understand that the promoters of Jaiprakash Infotech, that is Jaiprakash Associates, they have made an offer of over 10,000 crore rupees to acquire the company. That offer, we understand, will also be presented to the Supreme Court, and Jaiprakash Associates is also likely to move the apex court on this matter very soon.
Okay. Thank you very much for that. Let's move on. In the midst of the earnings season, a lot of mid-cap companies are coming out with their earnings. Sonal is here with a quick list. Sonal?
Well, a lot of stocks are reacting to their earnings. I'll start with Syntex Plastics. Weak set of numbers, actually. The revenue saw a dip because of declines in the custom molding segment. And on the operating profit margin front, the margins, they declined by 470 basis points to 9.1% versus 13.8%. And profits, they were also down by around 37%. And the management says that they have incurred one-time cost of around 45 crores for shutting down their US subsidiary and 47 crores for loan restructuring expenses. That's why the stock is red in trade today. Navin Fluorine, the numbers were not so bad, but they were lower than what MK had estimated. The revenue was up 5% at around 208 crores versus MK estimates of around 238 crores. Operating profit margins came in at 22% versus an estimate of around 24%. But however, the margins, they expanded because of lower costs like cost of material and depreciation. The Dhampur Sugar expected numbers, it was expected that the sugar segment will post a decline in their EBIT. Though the revenue growth was around 22%, the EBITDA was a loss of 25 crores versus a profit last year, and they reported a loss of 36 crores versus profits of around 36 crore last year. Fairchem Speciality, that stock is buzzing in trade today because there was strong volume revenue growth that led to strong growth in EBITDA as well as profit. Revenue went up by 41%. EBITDA grew by around 1.7 times, leading to a profit growth of around 2 times. That's why the stock is buzzing in trade today.
Apart from the big numbers that we're watching out for today, we'll also look out for, say, an emphasis. So Reema tracks that very well. Reema, what are the big expectations?
Well, for one, like the rest of the IT pack, Emphasis has had a very good run. The stock, in fact, is now approaching 4 digits, just on the verge of that 1,000 rupee mark. If you look at the performance in this year itself, the stock has seen a 40% rally. In the last 1 year, it's seen a 70% rally, and this is on the back of, an improvement in the company's financials. If you remember, the Blackstone open offer in 2016 was at a price of 457, and now look where it is. Blackstone has made a killing on its portfolio. A quick run through of the expectations then. Revenue growth is seen at about 2.5%, margin seen maintained at 15.5%, while profit growth will be close to about 4.2%. The company has been reporting a strong revenue growth for the last 3 quarters in a row. Factors which are working for them: HP, that's Hewlett-Packard business, was declining for the last many years, but now seems to have stabilized and showing a turnaround. Secondly, it's the direct international business, of which a part of the business, which is a majority of the business, is doing very well. We call it direct core, and that continues to grow above the industry growth rates. And digital risk, which is about 22% of the company's overall revenues, went through a rough time, but now has entered into a stable phase. So things are, moving for the company. The key to watch will be a continuation of the momentum in their direct core business. Does the company hold on to its margin guidance band of 14 to 16%? Would they look to increase it? Because they are operating at the upper end of it. The TCV wins have been strong, and the dividend policy as well as the cash utilization policy.
All right, Reema, thanks very much for that. We'll also look out for Ujjivan. So Abhishek is here to tell us what to expect. Abhishek.
Well, Sumera, the key number to watch out will be the disbursement. Disbursement growth in previous quarter was very strong, and as we have seen with NBFCs in Q4, they have reported a strong set of numbers when it comes to disbursement. So disbursement growth last quarter was at 28.5%. Anywhere between 25 to 30% will be good. Loan growth, albeit a small, lower base last year, 20% will be good. The improvement in gross NPA will be a key factor to watch. The last quarter, the gross NPA was at 4.24%. Net interest margin above 10% will be good. Last quarter, it was at 11%. But what I'll be watching out is for the yields. The yields have been on a declining trend, and whether they get arrested or not will be seen closely. Small finance banks operations are there, so we'll watch out for the kind of increase in OPEX. Our polls suggest an NII growth of close to 45.5% on a YOY basis, while net profit to nearly double to 38 crore versus 19 crore. That is a lower base last year. Even on a sequential basis, we expect the net profit to grow at 30%. Back to you.
Okay. Siemens has been in focus since it's reported its Q2 earnings last week. Weak management commentary and order book has kept the stock under pressure. Yash Jain caught up with the management, the MD and CEO of Sunil Mathur. Here's a slice of that very exclusive conversation.
Where we have missed in the pipeline is really the large projects. Okay. And these are projects which would normally come from the government, or from large capex spending, right? And that is really not come yet. There's a lot in the pipeline, so we are looking, and there are a lot of potentials over there. But we are waiting actually for the tenders to come out and actually start bidding for them. Our pipeline is very strong. We have an extremely strong order backlog.
As far as your order book backlog is concerned, what was the growth in the first 6 months as far as that order backlog is concerned? And going forward in the next 6 months, what's the kind of growth which you expect in that particular order book?
So we are expecting private sector capex to slowly start coming back. Okay. Already we are seeing good signs of that happening. Okay. And I do believe that that will bounce back. There are a couple of large government tenders which are also in the offing. Okay. And we will be bidding for those as well.
As far as a follow-up to again the order book is concerned, what kind of margin are you expecting from the current order book which you have in your hands at the moment?
I think if you look at our margin ranges for the last 2 or 3 years, we've been fairly consistent on the margin ranges there. Right. And I think our challenge is going to be really to try and see that we can maintain that. Our focus is on profitability and profitable growth. So we will not compromise on profitability just for the sake of growth.
In the recent past, Siemens India has transferred or sold a lot of attractive businesses which it had to the parent company, which is Siemens AG. Help me understand what is the rationale behind doing that, And does that not, in your sense, reduce the attractivity for investors as far as the Indian listed entity is concerned?
I'll answer the question in two parts.
Okay.
I think the first part is, if you look at the track record, in spite of the carve-outs that have happened,
Exactly.
Our bottom line has still grown. So finally, the shareholders have not really lost out, because the dividend comes out of the bottom line. And there has been very consistent bottom line growth in the last couple of years. Now, we are also a part of a global conglomerate, so to speak. And we benefit from the technology that is generated over there. We are able to apply that technology over here. But being a part of a global organization, there are global trends that are happening in a very rapidly changing market that forces the parent company to go in for consolidation, carve out businesses that don't make sense, etc. Now, once they have that world view on certain businesses, being a subsidiary, we have got to fall in line with that as well. Now, and this is what we try to do. Frankly, a lot of the carve-outs, and that's why you see the bottom line improving, a lot of the carve-outs that have happened have been in businesses where globally they have not really performed to the overall standards. But also there are strategic carve-outs or strategic mergers or alliances that are done at a global level, where we have got to fall in line. And we are doing that, but we are very conscious, as being a publicly listed company, that it is not to the detriment of the shareholders. And I think our track record has been pretty good. Finally, as I say, the bottom line is the bottom line growing. And I think the bottom line we can demonstrate over the last years has been growing pretty consistently, and that's what is important for the shareholders.
Do we see more such carve-outs? Do we see more such transfers of businesses happening to the parent company in the next couple of years as well?
So, it's a never-changing world, and I don't know what the parent decides. And as and when things like that come, we as a board in India, Siemens in India, have got to consider the implications here. And we will consider them, and at the right time we will announce them, but we will keep continuously, and our board is very conscious of that, that we will keep the shareholders' interests at the top of the mind.
One strategic...
Within, of course, within the overall constraints that we have. And as I said, we are hugely dependent in the country on the technology that we get from the parent, which is incurring all that expenditure on technology, and I'm not paying for it, to be honest.
One question as far as your strategic interest is concerned, BEML, a company where there are a lot of reports which suggest that you are interested in buying a stake. Help me understand, where has this process reached as far as internal management decision is concerned, and how strategically important would a stake in a company like BEML would be for Siemens India?
So I wouldn't like to comment on collaborations or merger or acquisition issues that we are looking at. We continue.
But are you looking at BEML?
We are looking at a whole lot of companies, right? We are looking at a whole lot of companies on a continuous basis in a lot of different areas.
Let me put it this way: is BEML a part of those whole lot of companies?
I would not like to comment on that for obvious reasons. And but suffice it to say that we are looking at organic growth, and we are looking at inorganic growth as well. We have the benefit of the complete support of the parent company, and the complete support of the parent company board to the growth story in India. There is a strong belief of the parent company in the growth story in India, and that growth story depends both on organic growth as well as inorganic growth. But I would not like to go into specifics. We are looking at all possibilities.
As far as the listed company Siemens India is concerned, of course there have been concerns with respect to it getting delisted at some point of time. Can you assure the investors that it will remain listed on the exchanges and there is no plan to delist the company, or is there some other plan?
Let me put it this way: delisting is not in my hands, so I can't speak for the parent company, but from my perspective, we've got a good business. It's growing well, shareholders are happy, and I, as the CEO and MD of the listed company here, my responsibility is to go out and grow the business, meet all the challenges and opportunities in the organization, and really add value to the shareholders over here. That's what I'm doing.